Everyone, welcome back to your third week of trading in the month of May. This is going to be a weekly market outlook for the 15th to the 19th of May 2023. So let's recap a little bit of what's really going on last week. Pretty hectic week. We've got the CPI numbers coming out from the US. The inflation number was a little bit softer. That came in at 4.9%. Core CPI year on year was also a little bit lower from 5.6% to 5.5%. Monthly gains on it, it's pretty much as per consensus, except for the core CPI, it is slightly higher at 0.4%. So initial reaction from last week was that we saw a little bit of a spike down in the US dollar, and then we've got the Bank of England. The Bank of England also announces a 25 basis points hike. Now in terms of their messaging, it is still a little bit confusing. It's not really as hawkish as what the ECB does or the FOMC does. So there's a little bit of pressure for the UK there for the sterling. And then we have the US core PPI numbers. Core PPI also come down a little bit month of month. The PPI number also went down a little bit month of month. And then we have the UK GDP numbers. This one here was expected to come in at 0% growth. Instead, it came in a little bit softer again, and negative 0.3%. So we're looking at negative growth in the UK. Now, with last week, in terms of the US dollar itself, initially, we've got that CPI number that was a kind of a negative for the US dollar. But then everything just reverses on itself because we have the US debt ceiling crisis, and that's still going to be an issue until both parties politically can come to an agreement that they are going to pass on that they're going to increase the debt ceiling, but otherwise we're still going to be looking at the potential for the US dollar to act as a safe haven. Now this is also something that kind of spill over onto gold itself a little bit. So instead of gold being pressured down, it actually kind of find a little bit of a support there for gold because of that safe haven status. Now in terms of whether or not the US dollar or the Japanese yen is actually stronger in terms of safe haven at this point in time, it is the US dollar itself, because we're going to take a look at the dollar Japanese yen later on. Okay, so for this week, we don't actually have a lot of high impact news. If you're trading Canadian dollars, then you've got your Canadian inflation numbers, but I typically it doesn't really have that huge of an impact compared to the other major economies out there. And then we have the US retail sales number. Again, US retail sales number looking to get a little bit of an improvement here. So could be another boost for the US dollar. The market could be considering that, hey, you know what, the economy in the US is not really doing that badly. And then we have the Australian unemployment numbers. This is expected to remain stable at 3.5%. Then weekly unemployment claims obviously coming out from the US. That's expected to come in a little bit softer, but still pretty high at 251,000 there. But other than that, it is likely going to be quite a quiet week this week again in terms of the fundamentals. So we are going to focus a little bit more on the technicals, and there are a lot of interesting things to look at. We're going to be focusing on the four majors, obviously, and then we'll take a look at the euro pound as a comparison as well. All right, number one, let's take a look at the dollar index here. This one here is a huge boost, and this is pretty much a clear indication that the US dollar is actually gaining strength. Now we do saw that support pretty much in February and in in April, about 180. That pretty much it's the bottom right now for the dollar index. We have surpassed 102, 102.50 even. Right now we're looking at 103, but again, in terms of whether or not this is going to reverse and potentially reverse the trend in the US dollar, it requires a move above 103.50, and that's something that we are still going to be monitoring at this point in time. In terms of momentum for the dollar index, we still see a stronger short-term momentum for the US dollar. So I think it kind of plays out well with how the US debt ceiling crisis is happening right now. I think in terms of the US dollar, where it's actually gaining strength. It's really more in terms of, people are not really sure what's going on with the debt crisis. But from my experience, it typically doesn't last very long. With the US, the government might shut down. I think they have shut down once before for 2 weeks. But then, politically, this is more of a political game rather than anything else. So they'll come to an agreement. They'll boost it up because it's the number one economy in the world. You don't want to see the government get shut down for a prolonged period of time. It just doesn't look good, right? So take advantage of the current volatility if you want to. The current confusion in the market. The sentiment is likely going to be like, it's not whether or not the whole debt crisis is going to get solved. It's just a matter of when the two-party Republicans and the Democrats are going to come into an agreement and pretty much raise the debt ceiling for the U.S. debts. Okay, let's take a look at the Aussie USD here. This one here, we put out a note last week on the Outlook. Daily outlook, and we put out a note here a little bit more on terms of that there's a resistance at 68 cents. That's still pretty much capping the market. That's where the Ichimoku cloud is located. Momentum has currently shifted back to the downside, so we're looking at a little bit more pressure for the Aussie USD here. Again, this is in line with the US dollar strengthening. I think with the Aussie USD here, we do expect a little bit more of a pullback. Immediate support at 66 cents, below that 65.50, and then below that 65 cents for the Aussie USD. The Euro USD might be a little bit different compared to the other majors. Right now, this is finding support at that key resistance that we are keeping a tap on. That's 1.0850 to 1.09. Momentum wise, it still points to the downside. However, looking at the current price level, I think we might actually find a little bit more support here at about 61.8%, previous 61.8%, about 1.0850. I think the key level to watch out would be 1.08. If there's a daily close below 1.08, then yes, we do anticipate a little bit more of a deeper pullback. But at this point in time, I think starting out Monday, we need to pay closer attention whether or not there's actually going to be a bounce around 1.0850, move back up above 1.09. If those happen, then there are probably early indications that the euro is not as weak as the other major currencies. So keep an eye out on the Euro USD. This one here is at critical support level. For the pound USD, we anticipated a correction from that rejection from the 26th of May 2022. We expected price to pull back at least to 1.25. I think we're looking at a much deeper correction here. I think we might actually see a potential for the pound USD to correct even lower. We're looking at 1.23 as the limit on how far it should correct itself, and within that limit, I think it's fair to say it is still a normal correction in the market, because we're looking at about 38.2% Fibonacci retracement up to 50%. We're still looking at support coming from the Ichimoku cloud, which is a really thick cloud at this point in time. So we do anticipate supports to come in, but in terms of the short-term direction, I think we should anticipate a little bit of a deeper pullback for the pound USD. Dollar yen, obviously this one gains, and this is how we look at whether or not the US dollar or the Japanese yen is actually the preferred currency for safe havens. The dollar is actually gaining against the Japanese yen. So this is again in line with what we're looking at, the dollar index, where it rises up. So at this point in time for the dollar Japanese yen, I think we are still looking for a potential for this one to come back towards 137, 138. Those are going to be your key resistance. We are likely going to be testing those levels as resistances. In terms of support, it remains the same. We've got 134.50 and 133.50. These are going to be your critical support level, and this has supported the pair from dropping even further, despite the drop in the US dollar previously, in terms of the safe haven and whatnot. The 133.50 and 134.50 holds the pair really strongly. So I think we are going to be looking at those as a reference point in terms of key support for the dollar Japanese yen. All right, just before we wrap up, I just want to show you the euro pound. So the question to a lot of traders would be, what in terms of the Euro USD or the pound USD, which one's likely going to gain traction? What we're looking at is that the Euro USD could be well supported, because by looking at the euro pound, I think we're looking at the potential for the euro pound to correct itself a little bit. We anticipate a little bit of a correction higher towards 88 pence for the euro pound. So I think we might actually get that on the euro pound. We anticipate that correction to happen. So with that, I think we could see the euro USD being well supported, while the pound USD continues its correction deeper this week. Okay, so with that, good luck to the trades, and I'll see you soon.